Good morning. Good afternoon, I should say.
Hey, how are you?
Good. How are you?
Good, nice to see you.
Very nice to see you. What's new and exciting?
Oh my God. It's just insane.
You're working your butt off, I see.
Yeah, we're working yeah, I mean, I could have made my life simpler and just focused on your retirement advisor. But, I decided to start this other thing for women.
I
So
was on your website and I was checking it out. I really like the content. I really do.
thank
There's
you.
so much there. It gives another platform,
Hmm.
especially one that's really out there today that I don't see anywhere else.
Thank
I
you.
really don't.
Yeah.
It's a great idea.
Yeah, I couldn't sleep last night and I was perusing YouTube because I'm trying to get some YouTube stuff going. I have some stuff up there, but yeah, there's just a lot of there wasn't much and just a lot of like junk, just I was looking more for retirement, but for women in retirement, but
Mhm.
even
There's not
for
much.
yeah, even for retirement, podcasting is a little more because I think it's easier to
Mhm.
podcast.
Mhm.
YouTube takes a little bit more prep and
So the podcasting, how are people taking to what you've been putting out?
I'm getting some really good feedback. It's interesting because I have a couple groups and I posted something the other day because you get all these like techniques from people. And I posted something the other day, like, if for the people that aren't interacting, you may be deleted. This was something my virtual assistant was suggesting. And this woman reached out to me and she's like, oh my gosh, don't delete me. Like I don't hardly ever interact or comment, but I love all your content.
Hmm.
So I was kind of
So you have a
like,
lot of silent people that are really
it's a,
listening to everything you're saying.
I guess, yeah. And it's like, it's like talking into the wind and wondering if anyone's paying attention. So
Mhm.
I had started just by like, let me get this podcasting thing down, let me get some episodes under my belt. And then pretty soon it was like, I don't know, like 8 months that I've been doing it. And I was like, wait, I should probably like let people know it's there.
Mhm.
So my son Jake works part-time for us right now. He's kind of trying to figure out his career in life. And so what I
He's your
said to him
youngest.
is,
He's your youngest, right?
he's my oldest.
Oh, he's your oldest. Okay, because I
Yeah.
know you have the twins.
Yeah, I have the 19-year-old twin girls,
Okay,
and then my
okay,
son's 28,
okay.
um, 29 in a week. He got laid off during COVID, and ever since then, he's just been kind of struggling. He has an economics degree from Boston University,
Mhm.
so he's super smart. He's got a girlfriend, other than his career, he's actually fine. But
Sometimes I think guys, me growing up, it took me a while to find myself as well.
yeah,
I think we get in our way.
yeah,
We block ourselves a lot.
yeah.
And when you can learn to see like, hey, wait a minute, there's nobody in the way but me,
Hmm.
then you learn to get past that eventually. So hopefully he'll get past that level.
Yeah, I think boys more than girls
Oh
mature
yeah.
much slower.
Oh, that's a fact.
And I think he's going, holy crap, I'm gonna be 30 in another year. So I think this birthday is probably gonna be like and he's moving in with his girlfriend. They're getting an apartment together. So I think, and she's like such a go-getter. So I
Mhm.
think she'll be a positive influence. So I
Good.
think I think in the next year he should get it together. But yeah, so what I asked him to do was, I have so much content. And actually, I was looking at a Dropbox folder today because I have a virtual assistant in Nairobi, and she's been helping me work on content for 2 years. I'm like, I have so much content now. I just have to go out there and market. I just have to
Mhm.
launch her retirement in a formal way. And to be honest, I've really just been trying to figure out what is the value proposition, like what is it that I'm actually exchanging money for.
Mhm.
And that's been the difficulty because I've had people say, oh, make it an RIA, like our old broker dealer securities, Cetera. They actually wouldn't let me do her retirement unless I became an RIA.
So you could
And
just you could be a fee only planner is what you could be, correct?
yeah, I could, yep, I could do
Are you a
fee only.
CFP? I don't remember.
Mm-mm.
Okay.
No, I don't have any designations. And so it's, at this point in my life, what do I want to learn, and get
Yeah.
licensed to do? And then, my significant other can do all that. So
You're right. You have that ability to say, okay, pivot to Brian.
Yeah. Yeah. And
Okay.
and her retirement, even though it hasn't been formally launched, I would say I've referred, because I don't get paid for the referral or whatever, but I've referred women over because they know I'm a part owner of a advisory firm. Probably, I need some data on this from Lisa, but probably 10 clients. And Brian loves to work with women.
Mhm.
In fact, quick story, he was talking with her retirement woman who came through something I did. And he had his first meeting with her, went great. He said she was awesome. And he's so good with people, but
Yes,
really
he
good with
is.
women. And, he's a gabber. So he's gabbing about all their stuff, and I'm just like, and I can hear him. I'm like, oh my God, will you shut up? I told him I was going to make we actually just recorded a video to thank people for coming to our class. And at the end in the video, I was like, all right, so if you want to talk with Brian after attending our 6-hour class, you just go to www.longasschatwithbrian.com. And our videographer, he was trying so hard not to laugh because it wasn't scripted. It just kind of came off the
That's
top of my
great.
head. But anyway, so we had this meeting with this woman, went great. And then he said, you have a spouse, so it'd be good to get your spouse involved. So the husband came on the second call, and he was just a know-it-all, was just kind of a butthead, and Brian was just like, oh my gosh. He's like, it was ridiculous. He said it was so bad that he left the call early and his wife apologized for his behavior.
Oh boy.
And said, what, I have my own money. I'm going to make my own decisions and I want to work with you. So single women actually are better because they don't have the potential butthead husband that can come in and just kind of blow everything up. Because I think a lot of men feel like they do know it all. And, that's.
Yeah. And the sooner you realize that you don't, the better you'll be.
Yeah, exactly.
I did that a long time ago. I got into too much trouble as a young man. Wait a minute, I don't know it all. Just be quiet, let your work speak for yourself. It's better to be seen and not heard.
Yeah.
A lot of times.
So are you doing well health-wise?
A lot better. What happened with the rejection was I had COVID in January. And they put me on that Paxlovid drug, that special drug that they had. And it's like an HIV drug. And it interacted with my immune suppressant drugs. And it caused me to go into rejection because I wasn't getting all the medication I was supposed to get. They caught it late. So they were really concerned at first, and they had bombarded me. Lynn, I was taking like 10,000 milligrams of steroids a day. I was roid raging to the point where I was like, honey, let me stay downstairs. Like every single thing, I would be like freaking out. I would go crazy.
Oh, wow.
And it took about a month and a half of that high dose to get it back to normal. I wasn't feeling really bad. A little run down, a little tired, winded, but for the most part, I wasn't that bad. But for it could turn into something that you would cause you to need another heart.
Oh,
the body, essentially, rejection is your heart. Your body's attacking your heart. Your body's trying to kill it. It thinks it's a foreign body.
Yeah.
So far so good. A lot better. I'm going for blood work on Tuesday, I believe. Yeah, Tuesday, to see how everything's going, and which is going to be good. And then I'm going to Myrtle Beach for a little golf and fishing trip next weekend, which is long overdue.
Oh, nice.
Long overdue. Just with a couple of colleagues. Actually, Rick McFadden, I think you know Rick. He's going down with me to our operations manager just bought a house down there. So we're going to go and spend a little time.
Nice. Awesome.
Thank God. I need to go fishing. I haven't been fishing in so many years. We're doing a little fishing as well.
Oh, good to hear.
Very excited. Very excited. Yeah. So real quickly, Tess, you remember Tess?
Yes.
I love her.
Oh.
That girl, you have to connect with her more.
Okay.
She is on the money. That girl, I know she's working in some sort of marketing company right now, but she's like you. Yeah. She has got her hands in every pot.
Yeah.
She is diversifying herself. I've had some really good conversations. I did a little research on her as well. If you look her up online.
Yeah, I'm trying to think of her last name.
I'll tell you in a second. Tess, hold on a second. She's an animal, by the way. Yeah. She works out like a beast. Tess Waresmith, WareSmith. Her email address, Tess.Waresmith, WareSmith @gmail.com.
Yeah. Nice.
Her number is 508
Yeah.
736
Yeah.
5115.
Okay.
Her title is a digital marketing consultant.
Okay.
And I've got a deal from her.
Yeah.
The gentleman that she spoke to you about turned into a transaction. I'm actually submitting the file today.
Nice.
The other transaction I closed, Ostro, was another deal that you passed to me. That one just closed. That was a big deal.
Good.
Working on some other people that you sent over. Squire was one of them. She's a possible purchase. I got to follow. She told me to follow up with her a few months down the line.
Yeah.
I'm going to check with her. But I mean, these people are when they come to the point where they're coming to see you, they need the help.
Yeah.
Yeah, it's not like they're just inquiring. No, they need help.
Yeah.
They're at that point.
I mean, I think because Brian doesn't really go down this path and because he's super busy, but the more I'm learning about reverse mortgage, the more appropriate it is for a lot of women because they can use their housing wealth to create that income. And I don't think of it as a last resort, although some people might argue that.
It used to be.
But
it really used to be. Not anymore.
But I think, and I see, people in these Facebook groups, which I email you about, and I'll be like, hey, what should I say to this? But so I am definitely learning about it. But I think in my next class, which I got a fly flying around here, go away.
Hate that.
I think in my next class, I kind of like formulating her retirement philosophy, even though we're not in a position to advise. So where I've come to with it is that I want it to be both an education platform and a marketplace that I connect women to resources they need to retire wealthier, healthier, happier. I actually just am going through a revision of the website, the homepage, and it's kind of pulling all those pieces together. And like in the happy space, I'm going to talk to people about happiness. I can connect them to a life coach, but guess what? Having personal pension plans and guaranteed income sources is proven to make people happier. So I'm going to tie in these strategies, health. Women spend a boatload of money on health because we live longer. And one of the ways to not spend so much is to make sure you pay attention to your health. So, we want to help women figure out, make sure they have HSAs to pay for healthcare. And so there's all these strategies that can help women be healthier, wealthier, and happier. And that's what I want to educate women about. I'm going to put a price tag on that education. I'll have the network of experts so I can connect people. Some are going to be affiliate relationships. Some are just, I need elder care services or whatever. There's a whole network that I'm building where there's some just resources that women might need. And then the other piece of it is my software platform. So I want to get more women using the software platform. And so taking them through a process. And that's kind of where the coaching comes in, which is really not really, it's not a concept I've proven yet because I haven't, quote, sold anyone on a retirement coaching process. But it's really to take those pieces and create a personal pension and protection plan. And part of my personal pension and protection plan is considering guaranteed income sources, annuities, considering your housing wealth. You got to have your assets. And guess what? We don't manage assets. So my whole thing is we'll prepare you to have those conversations. We'll educate you so that you can have some educated conversations and make educated decisions and be aware of strategies you might not otherwise have known about. And so it's just if I can do that and have like a small revenue stream, and obviously I'm going to be very forthcoming with the fact that I'm a silent partner, not so silent partner in an advisory firm with my significant other. And if they do need income distribution planning or investment advice, they're certainly welcome to talk to Brian.
You can speak to Brian. You're not obligated to speak to Brian, but we do have that available for you.
Yeah. So
Okay.
maybe if he and I weren't partners, I might set this up differently, but that's kind of the direction I'm going
As
in.
long as you, I mean, as long as you're forthcoming, that's no problem with that. There's no
Yeah.
issues there.
Yeah.
To piggyback on something that just popped into my head while you were talking, the long-term healthcare factor, because that in my spiel, in my every conversation I have about this product, I bring myself into it, my heart transplant, and the fact that I can't qualify for long-term healthcare.
Hmm.
And the fact that my wife is going to outlive me, regardless of me not having a heart transplant. If I was a normal man without a heart transplant,
Yeah.
odds are my wife will outlive me.
Right.
My goal as a husband and father is to make sure that my home is situated, my finances are situated. God forbid something should happen to me, my wife and my daughter are protected and have the means to live without me being here.
Yeah.
And that part of that plan is the reverse mortgage. I'm currently 50 years old. When I turn 62, which is the qualifying age, I'm going to open up a reverse mortgage line of credit. I'm going to choose a higher rate product. We call that max growth. Whereas on the other side of the coin is if you went with a lower rate product, we call that max funds. Lower rate gives you more money at inception, but you have a lower growth rate at inception. Whereas if you go with a high growth rate product, you'll have a higher interest rate, a higher growth rate, but you start out with less cash at inception. My goal in my scenario, and a lot of my clients who see it this way, is not to touch the money, is to actually pay down my closing costs to $50. So this way I'm only paying interest on that 50 and I'm maximizing my growth with every possible dollar. You do not pay off a reverse mortgage completely. It's a 100% guaranteed line of credit unless you pay it off. You could literally pay it off to $1. As long as you have it, some money in it, the line of credit would be open and valid. Once I pay it down to 50, I drop it, let it go. Picture 250,000, which is what my line of credit would roughly be at that point. 250,000 growing at 6% interest over the course of 20 years. Whether it's me or God willing, my wife will have this, I should have upwards of $8 to $1 million worth of tax-free proceeds to tap into on top of whatever else I have in my portfolio.
Right.
And I shut up and I give them a second and let them soak it in. Wow, that makes a difference. And then I take them to the optimizer, Lynn, and I show them what it can look like over time. I show them the max funds and the max growth side by side to show them which product makes the most sense. Hey, if you need more money now, are you looking to improve your kitchen or you need something for healthcare, whatever, max funds would be the better product. You need more cash at inception. But if you're looking for long-term growth, whether it's for long-term healthcare to mitigate sequence of return risk, what God forbid fund, whatever it could possibly be.
Yep.
This product is for you.
Yeah.
Mortgages are not meant for people in decumulation. It's made for people in accumulation while you're working.
Right.
My father is 76 years old. He has a mortgage on his co-op, $400 a month. He can't afford to live there anymore. I'm trying to get him to move, or God willing, they passed co-ops for reverse mortgages in New York recently, but there's no companies willing to do it yet.
Yeah.
Because it's probably too much red tape.
Yep. Yeah. I think I was talking to someone the other day about reverse mortgage and like, oh, I'd never do one of those. My somebody in their family lost their house. And I was like, well, it wasn't the reverse mortgage. It was probably because that person didn't pay their taxes.
Taxes, insurance. or homeowners association dues or what have you. It didn't maintain or follow the rules of the loan.
Right.
Just like any mortgage. And Lynn, the easiest way to explain a reverse mortgage to someone, Mr. Jones, Mrs. Jones, it's just like a regular mortgage. Same exact thing, except it allows you to make or not make a payment. You have a flexible payment option. If you want to make payments, you absolutely could. You're just not obligated to. If you choose not to make those payments still build up and accrue, just like a regular mortgage does, except it gets taxed on the ending balance of the loan and comes due when one of three things happens. If you ever decide to sell the home, the loan can come due. If you or your spouse are out of the home for more, if both you and your spouse are out of the home for more than a 12-month consecutive period, the loan can come due. And finally, when the last surviving spouse in the house passes away, the loan comes due. At that time, very important, one of the biggest misconceptions about this product, people always say that's the mortgage that they take your house. It's not true. The house stays in your name, just like a regular mortgage. You take out a regular mortgage, the house is always in your name. You just have a lien on the home. You owe a debt on the home. Same thing. When you both pass away, the loan's going to come due. But the difference here is you have up to a year to decide what the heirs have up to a year to decide what they want to do with that house. They have to decide whether or not they want to sell it or if they want to refinance and pay back and keep the home. They could actually purchase the house in 95% of the value of the home. That's a big deal in some circumstances.
Yep.
And the other option is sell the home, and whatever the difference in that value is would go to your heirs. If the home is underwater for whatever reason, if the balance exceeds the value, the heirs hand over the keys, do what's called a deed in lieu, hand it over, and walk away without coming out of pocket with a penny.
Nice.
When people hear that, they don't like, no, that doesn't sound right.
Yeah,
It doesn't. It
too
sounds
good
like
to be
too
true.
good to be true. It might sound that way, but this is the case. It's an FHA. It's a government insured loan. We are regulated beyond belief. Every step, every breath we take is regulated.
Yeah.
I have to lay it out on the table for my clients. This is what it looks like. There's no hiding fees. It's $31,000 is your cost. 2% is your upfront mortgage insurance premium that gets paid into the FHA pooled risk insurance fund to make sure that you have two key factors: guaranteed income, regardless of the value of the home, and you'll never owe more than the home is worth. That's the purpose of the insurance, and that's the purpose of the high cost, or the cause rather of the high cost of the loan.
Yeah.
Does that explanation soften the blow of the sticker shock of a cost of a reverse mortgage? Yeah, it usually does. But I don't care how much money you have. You can have millions of dollars in your portfolio. You see a $30,000 price tag, you're going to say, what is that?
Right.
And we explain that via the insurance piece, because it really is almost like an insurance product. That's what the FHA insurance is for.
Yeah.
So
mean, it's
once they
kinda
get
like-
past that and they understand it, and it takes a little time. Sometimes you have to slow down. Some people are more savvy, some are not. And one thing about me, Lynn, I'm really good with people. Like Brian is. I could really feel people open up. I make people cry.
Yeah.
My story makes people cry, but
Yeah.
that's really because of who I am, and I wear my heart on my sleeve, and I do that in my business as well. And it used to be, I've had colleagues in the past that say, that's not going to be good that you do that. You're showing too much of your life.
Yeah. No.
No, because people realize that you're genuine, that you really care about them, and you're not just out to make money. Of course, I want to make money. Everybody wants to make money.
Right.
It's how you make that money that makes the difference.
Yeah.
In my eyes, and the things that I've been through in my life, I've got to do everything as best I can and be as righteous as I can, not just as a man, as a person, as a father, as a husband, those things, as a son. My mother passed away in 2002. I want to honor her every single day by doing the best I can.
Yeah.
And that shows in the way I do my business.
Right. And that's why you're successful. I actually just recorded a video that I put on my YouTube channel. The title isn't this. The title's Why Advisors Are Failing Women, but the true title is Poops and Suits. And I talk about the poops and the suits, and I had a little fun with it, but it's really talking about the slick salespeople in the financial services industry that have, quite honestly, not just burned women, but in this case, have made women, feel ashamed, intimidated, alienated, kind of left in the lurch, and they're kind of gun shy as a result because they've had some bad experiences.
That is so true. I deal with a lot of single widowed women, tons of them, wonderful people. I'd have to say 50% of them are shell shocked, not just because of the loss of their spouse, just not knowing what's going on with the finances, not knowing the passwords of everything that the husband had everything in. just not knowing everything that they're supposed to know. 50% is about that case, but they're also shell shocked in the way where they've had those bad experiences, Lynn.
Mm-hmm.
I've spoken to this one or that one, and I've gotten burned. I'm afraid of what you're telling me is not the truth. Well, as time goes on, you're going to learn by dealing with me, and as we go through the process, that we are genuine and we do care.
Yeah.
Our goal is yes, we want to close a loan, but does it make sense for you? Right off the bat, we're going to tell you in our review of all the information. If this doesn't make sense, I can't. If someone says to me, I want to take an application regardless, I can't refuse it if they want to do the application. But I'm going to tell them this does not make sense. You should not do this. If you were my mom or my dad, you should not be doing this. But if you want to do it, I can't refuse it. By law, I'm not allowed to. But I'm going to tell you this does not make sense. You're wasting money.
Yeah.
And I've done that many times.
Yeah.
And so a few people have actually moved forward and failed.
Mm-hmm. Yeah, it seems like it's not a tool for like really poor people, like that can't pay their taxes or can't.
And that's a great
upkeep.
thing to bring up. It's a massive question that needs to be dealt with. And the conversation needs to be had with that client. Maybe it's time to right size into assisted living, maybe a Section 8 apartment or something like that. Or maybe sell your home, take that money, put it in as a nest egg, and just rent someplace.
Right.
Maybe that makes more sense.
Mm-hmm.
Or right size into a smaller home with no homeowners association dues, something more manageable. That people are afraid to have that conversation. The reality is scary. My father in particular, the man's been in this home for almost 20 years. The reality is you can't afford to stay here anymore. And seniors don't see it. Some do, but some don't. Some like my father, he's an old school, off the boat Italian.
Yeah.
Thick-headed, doesn't want to listen.
Do you think that that's one of the primary benefits of a reverse mortgage, is that it allows people to stay in their home?
Absolutely. Absolutely. The age in place is important. And what happened with COVID, with the nursing home debacle in New York, that scared the heck out of so many people. I'll tell you, right after that happened, my phone exploded. Throughout that whole summer, my phone was ringing off the hook. For that purpose alone, it was long-term health care. How do I pay for someone to take care of me in my home? I don't want to go to a nursing home. I don't want that to happen to me.
Right.
And that was a big part of my business last summer.
So would you say those are the three main benefits then of a reverse mortgage? Is one, it allows you to stay in your home. Two, it provides that income buffer for long-term care incident. Three, it's another big one.
Well, the elimination of the mortgage payment is really the number one reason people do it. That's the number one benefit. Sometimes there's just enough equity in the home, the qualifying proceeds, to eliminate the mortgage, and that's the benefit alone. For most people, that's the benefit.
And how much equity do you need to have in your
Depending on the client's age. So again, the qualifying age is 62. It used to be at 62, you get 50% of the equity, but with current rates have significantly impacted that. We're almost close to 40% at this point at age 62, roughly. Roughly. But so when rates go up, when interest rates go up in reverse mortgages, principal limit, what a principal limit is the percentage a client can qualify for. That's what we call it. It's called the principal limit. So if a house is worth $1 million, I'm 62, my principal limit would be, let's say, $400,000, something like that. So, and that would be their principal limit minus closing costs. So closing costs, you have a 2% upfront premium based on the value of the home. And then there's a 0.5% ongoing MIP. MIP stands for mortgage insurance premium. That's the premium that's paid into the pooled risk FHA insurance fund that allows the loan to be non-recourse and guaranteed income. Those are the three main reasons I would say is the mortgage payoff, long-term health care, and also the fact that God forbid fund, just to have that money there and available. Mitigating sequence of return risk is going to be huge next year with what's coming up. I honestly believe that the reverse mortgage industry is going through a big change right now with the rates. there's going to be a big change in regards to how much money is available. The money's going to go way down. I'm hoping that HUD makes an adjustment to principal limits to allow the floor to go a little bit lower,
Mhm.
and it'll allow principal limits to stay where, at least stay where they are, as opposed to going down.
Yeah.
So those are all hopes and
Yeah.
dreams of mine. But hopefully in the long run, I believe that this time next year, people are going to start to real seniors especially are going to need money.
Yeah.
And how are they going to tap into that? And that's their home equity.
Right. Yeah.
Yeah,
Exactly.
and making those mortgage payments that they're able to do now, and then pay for that extra gas and everything else that goes along with it. They're not going to be able to afford that.
Right.
You're going to see. I think you're also going to see a mass exodus of people right sizing from larger homes to smaller homes.
Yeah. We bought our home. My realtor kept calling it an aging in place home because it's a ranch, all one level.
Mhm.
And she'd always look at Brian more than me when she said that. And he was like, stop calling it that. He's like, but he's the man that's going to be working with clients until he's 100.
Yep.
His father's 93.
He was
And I
telling
think,
me his longevity there, that's for sure.
oh yeah. Yeah. We went to visit him and he's, I sit down on the couch and he's like, I want to tell you about this Ed Slott article I just saw. And then I just got this JD Melberg stuff. And I'm like, okay, he loves Ed Slott. So I was like, I should get Ed Slott and Norman on a call together. He would
He would get a kick out of that.
he would love it. So I'm like,
He would
maybe I
get a
could
big
go
kick
set
out
up
of that.
I'm going to see if Ed Slott will do an interview with me and I'll have Norman there. But like Brian, I probably wouldn't get a word in edgewise, but yeah, man, he's sharp as a tack. So, yeah, he's funny. I took a picture of him, while we were there visiting and he was in his lazy boy, like 5 feet from the TV.
Oh,
And, he's a Jewish guy. So it's kind of an oxymoron, but he was sitting in his lazy boy. I showed it to my kids and he had like bright red socks on. He was just cute. I showed it to my kids. I texted to him and I'm like, is this my future? And they were all like,
stop.
oh my gosh. And then they're like, all three of them, they're like, did you see what's on the TV? It was a big thing on CNN about Trump. So it was like a big picture of Trump on the screen. And I was just like, oh my goodness. Yeah.
That's so funny.
Yeah, it's a very classic.
That's hysterical.
Classic
Sounds like a
photo.
nice guy though.
Yeah. Oh yeah. And he's like, and so, when I see him, I always get him talking about this stuff because I know he likes it. So I was talking to him about reverse mortgages and I was talking to him about her retirement and everything going on. And
what did he do?
He was a school teacher. He was an art teacher in a high school. And then he started selling like prudential policies to women because it was mostly women back then, school teachers. So Brian, he actually taught in the same school system as my mother, and he and my mother know each other quite well. In fact, I said at a family party one day, I said, Norman actually asked my mother out on a date back in the day, and everyone was like, oh my God.
Really?
Yeah,
That's interesting.
Yeah. It is kind of funny. So he did that. And then, he just built his business. And when he retired, he started doing it full time. And then when Brian graduated college, after a couple of years, he came and worked for him. So he still has a lot of the old teacher clients. In fact, my mom did some telemarketing for us. She called clients basically to check in with them and see how they're doing. And, we're like, Mom, are you done? After a couple of days. And she's like, oh no, I've only called like 10 people. And we're like, what? She's like, well, everyone I talked to, I'm on the phone for like an hour because I know a lot of them because I used to school with them. And then she was great because then she's like, I was even talking to women I don't know. This one woman lost her purse and we went into this whole so I'm like, we need to have my mother call all the clients.
That's portfolio longevity right there.
Yeah. Once a quarter just to have a conversation with Carol.
Oh my God. That's so
gosh.
great.
Yeah. And she loved it.
How you been? Everything good? Okay. If you need anything, call my son-in-law. He's a good guy.
Yeah, I know. Oh, and she loves Brian, so she'll talk his ear off. And so yeah, we need to get her on. She's been suffering from or not suffering. She's been battling ovarian cancer, but she's doing
God bless
good.
her. I'll pray for her.
So we next week she's going for another appointment. So if she's up to it, we need to get her on another call cycle. Yeah, she's doing great. But
How old is she?
anyway, yes, my mom's 87.
Oh, God bless her.
And Brian's mom's 87. They're actually really best buddies, Brian's
Aw.
mom and my mom. And then his dad's 93. My dad is 85. And, knock on wood, they're all
Thank
they're
God.
all
Thank God.
doing
Yeah, my
good.
father's going to be 110 before he's gone. My mother had the same heart ailment I have. That's why she passed. But
Oh, really? Okay,
yeah,
so
yeah,
it's
it was
genetic.
genetic. Yeah.
It's
Thank
genetics.
God we had
So you're
we had a gene study done going there. We had
yeah,
a gene study done. And thank God my daughter doesn't have the gene.
good.
Thank God. Real fast story on that one. We had the gene study done. I think it was the day before I found out. I was in my backyard here. It was in the evening. I was praying to God. I said, Lord, please. I said, take me today. Take me right now for her not to have. Please, God, just take me. Later on that evening, I had a heart arrhythmia. I was working outside. I have a tree that was outside here. I passed out and hit my face up against the tree,
Uh,
fell into the catcher's position, hugging the tree.
uh,
And I woke up and I heard my mother's and their sisters talking.
Oh.
Swear to God. I'm like, and I said to myself, I went, Ma?
uh,
And I woke up and I'm like, oh my God, where the heck am I? And then I realized where I was. I rolled back. I had torn a ligament in my left knee. My face was all bloodied. I realized what happened. Long story short, had arrhythmia, went to the doctor, everything was okay. My defibrillator saved my life. I had a defibrillator in my chest at the time. Next day, the phone rings. It's the doctor. She didn't have it. So I said to my wife, I said, if there ever was a sign of God kicking someone in the ass, that was me yesterday. That was God telling me, I got you.
Yeah.
That I got you
Oh,
back. Don't
oh,
worry
that gives
about it.
me the chills.
I swear, when I tell you, I heard my mother's voice. And I
That's
heard that, like I heard them talking in Italian.
yeah.
And I'm like, Ma? And that's when I woke up. I'm like, whoa,
Whoa.
whoa. That was
Yeah.
weird.
Yeah. That was weird.
It was interesting. It was interesting.
So
But the podcast. So I mean, basically the podcast would be just like this, right?
yeah.
Or is it more formal? Or is it just like this?
No, I was actually thinking as we were talking, I could probably piece. My son's a recording engineer, so he
Oh, okay.
pieces it all together. So
Oh, cool.
we
All
could
right.
actually because I actually like it where it's a little more like not like formal questions and
Yeah,
answers.
it's just like have a conversation.
You just have a conversation, but what he does is he'll like I'm recording today, so I could take it and say, can you piece some pieces of this together and create one longer. They're usually like 15 to 20 minutes, just I had longer one. I did an interview with Larry Kotlikoff. He's a BU professor.
I mean, I know the name.
Yeah, he's an economics professor at Boston University. He's got a software program. I actually asked him about
Is
reverse
this the one that
mortgages.
Brian that talks to all the time?
Yeah, Brian talks to
Okay.
him.
Okay.
But he's kind of anti-government, and so
Yeah, it is the guy that Brian talks to all the time. I
yeah.
remember this.
And then I talked to him about reverse mortgages, and he's like, "No, it's a government-backed program. I don't believe in it. High fees, too complicated." And so I was telling Jake, Jake did the video. He was doing the editing, and I'm like, "Can you take that section out?" And he's like, "Mom, I don't really think you should take that out." He's like, "Your podcast is people with all different opinions. You're asking them for their opinion.
He's right.
So don't delete their opinion if you don't agree with it." And I was like, I know, but I just didn't like it because he didn't really back it up. He didn't really back it up.
Well,
with
the counter
facts.
to the counter to that as well, Mr. So-and-so. There are other products out there. Like we have our proprietary product, Equity Elite, which is actually now the line of credit product is now available in Massachusetts. It's a jumbo product, is what it is, in my opinion. But we were able to use this product in front of the HECM recently and give the clients more money with our line of credit product. But now that rates have gone up, our rates are a little higher. They're upwards of 8 and 9% now with our line of credit product and our fixed rate products. But we're able to lend up to $4 million with that product. I mean, that's a $10 million home.
Right.
But picture a $4 million line of credit for a total cost of $125. Reason for the lower cost, there's no upfront mortgage insurance premium. It's not an FHA insured loan. It's a lender. It's the investor insured loan. Basically, the lender insures it. We back it up. It's still non-recourse. Still has all the same bells and whistles, except for the fact that we are the ones that insure the loan.
Okay.
And the cost is $125. So I mean, you can't go wrong.
Yeah.
but the rates are much higher.
Yeah. So speaking of that, I think what I want to do is ask you a question about complexity and cost, because those are the two main things that you
Mhm,
hear.
mhm.
So, so I'm going to ask you about that. And then I think if Jake's able to pull, a good enough amount of time
Mhm.
together and I can have you listen to it. And if you think it
Sure, of
sounds good, we can go with it.
course.
Um, but if that's weird, he's calling me right now. Ooh, I
He
hate when
heard
that
you.
happens.
Ears are
Oh my
ringing.
gosh. Whoa. So, um, so basically, Luke, I did a podcast recently with Larry Kotlikoff of Boston University. He's an economics professor, and he actually said, "Yeah, I'm not a big fan of reverse mortgages.
Mhm.
One, because he's not really fond of a lot of government-backed programs, but his biggest two things were complexity and cost. And because our podcast was about other topics, we really didn't dig into, any data behind his opinion. So I'm always like, okay, it's fine to have that opinion, but what's the data behind it? So I'd be interested to know if someone says, okay, reverse mortgage too expensive, too complex, how would you respond to that?
It's very easy. I mean, there's other alternatives. We have proprietary products that offer costs as low as $125. Totally different type of product geared towards, I think it's more of a jumbo scenario product where we could actually lend up to $4 million with that product. But again, we would show the client what that product looks like. If it makes sense for that particular client, we would go with that type of product. But on the HECM side, a home equity conversion mortgage, a standard FHA insured loan, the cost of the loan, we like to look at the product. It's like an insurance product, Lynn. There's an 2% upfront mortgage insurance premium that you pay into the FHA pooled risk insurance fund. And then there's a 0.5% again mixed into the rate of the product. It's called an ongoing MIP, or mortgage insurance premium. That insurance premium covers two important key factors: the guaranteed income piece and the fact that you'll never owe more than the home is worth. So let's say, for instance, you have a $500,000 home with a $300,000 line of credit in place. I like to use a place like Flint, Michigan. Now let's say that we find out there's lead in the water. The house is now worth $100,000.
Mhm.
So you have a $300,000 line of credit in place with a home that's worth $100,000. Client decides to take out that $300,000, put that into their checking account, and then turns around and says, you know what, I want to sell the home. Sells the home for $100,000, pays back the bank the $100,000. The FHA pooled risk insurance fund makes up that difference, alleviating the client, or if it was the client's heirs, of any burden whatsoever. They could simply walk away. So, but in this case, that client walked away with the $300,000 in their pocket.
Yeah.
That's the power of the insurance. And that's how I normally counter the sticker shock of a reverse mortgage price tag. I'm not going to, no one should sugarcoat a reverse mortgage price tag. It can be expensive. There's a 2% upfront premium based on the value of the home. $1 million home, that's a lot of money up front and your closing costs. So we explain it all. We lay it out. We show it all on the table, break it all down. It's just, and again, Lynn, we've had this conversation before. It's just like a regular mortgage, a reverse mortgage, except it gives you the flexibility to make or not make payments.
Right.
If you wanted to make payments, you absolutely could. You're just not obligated to.
Okay.
So to counter this gentleman in regards to the complexity and cost, education is key. A reverse mortgage isn't for everyone, but it should be discussed in a financial plan with your financial planner. It should be discussed. Anytime you add a reverse mortgage to a financial plan, it always increases the probability of success. If you're eliminating a mortgage payment, you could add an income stream, or just to have as a God forbid fund growing on the backside. Remember, a reverse mortgage line of credit grows over time. Biggest difference between a home equity line of credit, a standard HELOC, and a HECM, a home equity conversion mortgage, you have to make payments with a HELOC. You don't make payments with a reverse mortgage. You have a flexible payment option. Your line of credit, let's say you have $100,000 here and $100,000 here. That $100,000, it will always be $100,000. This $100,000, while you're not using it, depending on the product you choose, will continue to grow. So over time, that $100,000 could turn into $200,000 over the course of 10, 15 years, or depending on the product and the rate you choose, would dictate how quickly that money grows. Whether it's a max fund strategy or a max growth strategy would dictate what product you go with. And your need would dictate that as well. Whether you need money now, so you would go with a product that you would get more money at inception, or you're looking at a long-term where you don't intend to touch the money, you want it to grow and compound, like myself with my long-term healthcare plans, that would make more sense.
Right.
So my counter to that, gentleman, would be education. Let's have a conversation. Let's learn more about it. Let's look at your particular scenario, because it might not work for you, but let's at least vet it.
Yep.
Let's look at it. Let's put it on paper, compare side by side from what you have now to what the reverse mortgage can do. If this impacts your probability of success, this might make sense, but it's at least, you should at least have that conversation.
Right.
In my opinion.
Yeah. I always think about, any kind of fee is, what will I get in return or benefit for that fee? Okay. So if I'm going to pay that 2% up front, either when is it going to be paid back, or what's the value that I'm going to be getting for that fee? So I was kind of put it in that sense. Those things that you mentioned earlier, right? Those main benefits. And I want to
repeat 2 key factors. Yep.
Yeah. The
2 key factors, guaranteed income.
Yep.
And the fact that the home is non-recourse. You'll never owe more than the home is worth. That's where the insurance falls in.
Right.
Regardless of the value of the home. Again, that $300,000 line of credit and that $100,000 value, that 300 grand is in full force. That money's yours. It can't change regardless of what happens to the market. Rates go up or down, that 300 grand stays in place. Matter of fact, if rates go up, let's say you had a 4% appreciation rate or growth rate on that line of credit. And with what just took place with interest rates over time, the rates are going to go up. So if you're in a max growth scenario where you're just looking at your line of credit, you're just allowing it to compound and grow, you're going to root for rates to go up. My scenario with my heart transplant, when I open up my line of credit, I'm not going to touch that money and I'm going to allow it to grow and compound, and I'm going to wish for rates to go up. Right. The higher my interest rates go, the higher my line of credit's going to grow. So picture my $250,000 line of credit would initially start growing at, let's say, 6%. Interest rates go up 2%. I'm at 8% growth on 250,000 over the course of 20 years. That's a lot of money, tax-free dollars.
Yeah, I was just going to, I wanted to circle back to that. So tax-free dollars, because another component that I educate women about is taxes and how to be more tax efficient and do some really good tax planning. So it's tax-free, correct?
100% tax exempt. It doesn't affect Social Security, doesn't affect Medicare. It can affect Medicaid. You can still get a reverse mortgage with Medicaid, but you can't take out more than you need every month. You cannot have any overage in your account. My suggestion, if you're on Medicaid, is to discuss that with your Medicaid rep. Let them know, listen, I'm thinking about taking out a reverse mortgage. I'm only going to take out exactly what I need every month, and there won't be any overage. Is this going to be okay? I'm almost 99% sure that that's the case, but I always advise, please speak to Medicaid in regards to that. But aside from that, Social Security and Medicare has no impact whatsoever.
Okay. And why would you encourage someone to consider reverse mortgage in 2022?
Number one, if you have a mortgage and while you're not working, it's a big mistake. Mortgages are for people that are in accumulation, not in decumulation. If you have a mortgage and you're 62 or older, you have a mortgage, a significant mortgage, you should look to eliminate it with a reverse mortgage as soon as possible, just to eliminate that debt. And keep in mind, you can actually, if you're comfortable making payments, you can actually continue to do that with a reverse mortgage. And by doing so, what you do, if you went into an adjustable rate product, all reverse mortgage lines of credit are adjustable rate products. I have to make that clear. So if you make that payment, let's say you pay off your mortgage, there's just enough equity or qualifying proceeds to pay off that debt, but you're comfortable making that payment. But the reason why you refinance was, I'm 62 or 65 years old, let's say 65 years old. I'm not in the greatest of health, and God forbid something happens to me and I can't make that payment. I want that flexibility to, if I want to stop making payments, I can. Or if I could make a reduced payment or whatever, I can make a payment of whatever I want to do.
Yeah.
So, but by making those payments, yes, you'll pay down the balance just like you would a regular mortgage, but at the same time, you're opening up a line of credit. You're opening up access to a line of credit by making those payments. So it might be advantageous if you have the ability to do so and continue to do so. Make those payments as long as possible, because you will have opened up access to that money later on.
Okay.
And open up growth to that money.
Yeah.
In the event that, I mean, again, the number one reason of reverse mortgage people take out a reverse mortgage is to eliminate that mortgage debt.
Right.
Keep in mind we had discussed earlier that the principal limits the qualifying proceeds based on the client's age. What's going on with the rate environment right now? That's going down.
Okay.
So a lot of this, we are going to lose a lot of business, I think, over the next year due to that fact. Excuse me, that the values of the homes, I think, are going to level off. I think the principal limits are going to start to go down. So I think it's going to push out some people that were just on the cusp rather of getting by
Mhm.
in qualifying proceeds. Are going to get, a lot of people are going to get it pushed out. But in the long run, I think, a reverse mortgage is always a good idea, but it also has to be vetted. There's legacy concerns that have to be discussed. Usually, it used to be many years ago that legacy was a big deal. And the conversations I've had with a lot of my financial planner partners and clients in general, they're not worried about legacy, really.
Yeah.
It's like, I've done everything I can to support my children. If there's something left for them, great. If not, I'm still here.
Yeah.
I'm
I
still
don't know if that
alive.
was, I don't know if that was, yeah, because I think I'm seeing that more too.
I hear it every day. I asked the question because you have to. Like, are you concerned with legacy? Is there children involved? What are your concerns about that? And well, 95% of them, I have no concerns about it. My kids are fine, or they could fend for themselves. If there's something left, great. We've supported them our whole lives, and it's our turn. This is our
Yeah.
retirement.
Yeah. I don't know if it's maybe those people are a little too old to be the helicopter parents, but maybe it's some of it is like, oh, we've spoiled our kids rotten. Now it's time for them just to, it's time for us.
No, something I've heard that too. But you do have those clients that are very concerned with what is left over for the family. And I understand that. My
Would
mother
you?
was an old school Italian woman who was so worried about what she left for us.
Yeah.
She did a reverse mortgage back in 2001, the year before she died. Redid her kitchen, but before she came to us and said, "Oh, I don't want to take away from your birthright." And this, we were like, "Mom, don't worry about it. We have everything we need. Don't worry. You could go ahead and do it." A year later, she passed away. But point is, if it makes sense, we have to review it, go over the numbers, and if it makes sense, you should do it.
Yeah.
In the long run, it's going to benefit you.
Yeah.
It's going to give you the liquid cash that you need. If it's an income stream, if it's a long-term health care scenario, or you mitigating sequence of return risk, or offsetting a bear market, there's a lot of different things you could use a reverse mortgage for. It can be complex, but with the conversation that you have with myself and your financial planner, which is really important, I think you should definitely bring a financial planner into this. Discuss it, go over your entire plan, work out your budget, bring this in, and this will increase that probability of success. Let's say you were at a 70% probability of success with all your portfolio and everything you've had, your income. You bring this into the mix, you're upwards of a 95, 100% success rate in certain circumstances. Not all circumstances, but in some circumstances.
Yeah. I like that higher probability. Sounds good.
Yeah, I mean, listen, I'm always optimistic. I like to keep my glass. I like to look at it as half full as opposed to half empty. But in the real world, people always try and knock it down. So
yeah. I also had a conversation with Jack Guttentag. It's the mortgage professor, I guess, is
I'm familiar with him.
started from, and he has a software program that I haven't had a chance to use, but it kind of takes a look and calculates all those, integrates your assets, annuities, and reverse mortgage to get to that outcome that you were talking about. And I know there's a version of it for advisors, and on that back side of it for advisors, you can integrate Social Security and other things, because I was like, well, if you don't incorporate everything, I don't feel like it's completely useful. But anyway, I didn't know if you had heard about that software, if you've checked it out. Sounds kind of interesting.
I haven't actually.
Yeah.
Unfortunately, I should. Now I will.
Yeah, he's been working on it for a while. What the heck is it called? It's called I'll send you the link for it.
Okay.
I'm not going to include this in the podcast,
Sure, sure,
but I
sure,
was
sure.
just curious.
Mhm.
Because his guy that he works with, Alan Redstone, because he's like 98 years old, this
Oh,
guy
wow.
now, but his partner, Alan Redstone, did a quick demo of the software, and there's a version that, end consumers can use. But I'm always kind of a little leery of that because it can give, you know, it's nice to get an indication of how these things could integrate together, but
Mhm.
until you really have a financial planner like Brian to really run it, it's a little concerning to make decisions based on.
Yeah, yeah. I mean, like this, for instance, there's two transactions, there's two people that I'm working with, Brian, that I think Princeton is one other. That I want to get on the phone with them as soon as possible. That because rates are going haywire right now. I think people should get in as soon as possible. Like, as a matter of fact, I was doing a personal transaction for a planner, talking to another planner today for a personal transaction. And her question was, should we wait? Absolutely not. You want to jump in now while the rates are where they are. And when they do go up, you'll benefit from that growth.
Right. Yeah.
You start out low, but in the long run, when those rates are going to go up over the next year. I think this time next year, I'm thinking for between now and next year, we probably got another point between now and next year, at least another point going up.
Yeah.
I think, in my opinion. And then and the reverse mortgage industry in itself is going to blow up because, again, people are going to need money.
Yeah. Yeah. I know, and again, I'm gonna go back to the podcast, a podcast question,
Mhm.
but this is not one. But when we were talking about widowers, I've really been thinking about focusing her retirement on suddenly single and single women, and maybe doing like a widower's guide to read before you're a widow. Because I
Mhm.
think I have two friends that have become widows in the last year with, 58-ish-year-old husbands that
Sorry to
died
hear that.
unexpectedly, and they they just weren't prepared.
Most people aren't. You
Yeah,
don't. Who wants to be? You don't even want to think about
I
that.
know. I know. But
You
you
know.
gotta be more like my mother. I called her the other day and I'm like, what are you doing, Mom? She's like, oh, I was just working on my the playlist that I want for my funeral. I was like, oh,
She
okay.
sounds like me. I did the same thing when I was in the hospital.
Well, I
Uh,
actually, every time Brian and I go somewhere like together, more like on a plane,
mm,
my son gets the text and we just move. So I'm like, okay, the strong box is here, the key is here, and the envelope that's sealed to not be opened unless something happens to me is here.
mm.
And I just sat down one day and just told him where everything is. I need to put it online in like a vault or whatever. But he's probably like, oh shit, Mom's going away again. I'm gonna get the text reminding me where the stuff is. And then I'm like, also there's little booklets that I put together for each one of you. He's like, what? And maybe I was telling my daughter. I don't think I told my son about the booklets, but they're my Be Happy books that I made for the kids.
Oh, that's cute.
My daughter's like, I don't want to read a Be Happy book. And I'm like, well, you're
Oh,
going to get
oh.
it.
I mean, when I was in the hospital, I when I was in the hospital, I took to pen and paper and just started writing everything. Like, wrote everything down. I wrote all the passwords. I wrote down where the strong box was, or what the combination to the safe is, where I hid some jewelry, all that stuff that the passwords. And again, from experience, from
Yeah.
my experience with my client base, dealing with the widows rather, and not knowing I didn't expect them to die so young. I didn't know this was going to happen. We never talked about it because people don't. Like my mom, I'll use an example. My mother-in-law, God bless her, they don't want to talk about the end. I'm
Yeah.
like, but Mom, you're going to be 80 years old this year. Like, my mother passed away at 60. So I'm
Mm,
like, thank God you made it this far. But, realistically, hopefully you're here for another 20 years, Mom, God willing. But
yeah.
you got to have that conversation with yourself. God, what happens if something should happen to you? Does your daughter and your son know everything? Do
Right.
they know where everything is? Do they, I mean, it's very important. And I have that conversation with my clients. Are you aware of all this? Make sure you know.
Yeah.
If something
Yeah.
happens, even like my clients that are still married, I bring this up. Please have this conversation. You
Oh yeah.
have to you're hurting yourselves if you don't speak to each other about it and your children
Right.
about it.
Yeah.
Because in the long run, they have to know. In the end, when you're gone, no one's going to know anything. You have to make sure it's very important that you divulge all that information to your family and you have it at least have it written down someplace.
Yeah. I actually was thinking of putting together a little booklet for men actually that says, when I kick the bucket, this is what you should know.
That's a great idea. That is a fantastic idea.
Yeah.
You know that because guys are stupid.
Guys are stupid, but they want to protect their families. Like the first thing
Yeah.
you said was,
You
I want to
kidding
make
me?
sure, I want to make sure my wife and my daughter are protected.
I lose sleep over it.
Yeah.
I wake up in the middle of the night. I really
Yeah.
do.
Yeah.
Over thinking about making sure everything is done.
Do you know what happens to me in the middle of the night?
What's
So
that?
like a week ago, I was having this dream and I was trying to do something and Brian was there in my dream and he wouldn't shut up. And he just kept talking and talking and talking. And I never do this, but I guess I literally screamed out like loud, 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 Brian, please. I don't even think I said please. I said, Brian, just shut up. Well, because he was asleep when I screamed out, he didn't hear the first part. So he didn't hear me say Brian, but he woke me up and he's like, wait, you just screamed. What's going on? You scared me. And I was like, well, what did I say? And he's like, you said, just shut up. And I'm like, oh my goodness. Thank you. Thank you. Thank you, Lord. He didn't hear me say Brian. So
That is so
I
funny.
was telling
That's
all
so
my friends,
funny.
I'm like, oh my gosh, I had this dream. I screamed out, but the funniest part is he didn't hear me say Brian.
Oh my God. I got really, after my surgery, like people always ask you, do you feel anything from the heart, anything from the person? I never felt anything aside from I got really extremely vivid dreams to
Mm.
the point where I could actually feel heat
Oh,
and feel people. Actually,
oh,
I could wake up, go to the bathroom, come back, and get right back into the dream. It was
whoa.
very strange.
Wow.
That was like almost for a year that happened, and then it went away.
Oh, that's crazy.
I
Yeah,
was
my
like, that was
uncle,
odd.
unrelated, but my uncle had his shoulder amputated when he was 12.
Oh
And
my
I don't know.
gosh.
I read in he was a 50-year cancer survivor of Dana-Farber. He actually had
Oh
Dana-Farber as a
wow.
doctor. But he didn't pass from that. He passed from some stupid infection from a procedure, but crazy because he was such a hero. But anyway, I read this article about phantom pain, and he basically, when I went to visit him one day, I was like, do you have that? And he's like, oh yeah, my left arm my left arm can itch, but it's not
Isn't that
there.
crazy?
So I can't
It's in
itch
your
it.
head. It's in your head.
I was like
Yeah.
blown
I
away. I
learned
was
that
like,
from Mesh.
oh really?
Yeah.
Like what? All right, I want to wrap this up because I
Sure.
know you got stuff to do. I've got stuff
Mhm.
to do. And one of my questions that I wanted to ask you was something called HECM for purchase.
Mhm.
And so HECM is home equity conversion mortgage, and it's
Mhm.
backed by the FHA. So if
Mhm.
it's not called a HECM, it's not FHA,
It's not
correct?
FHA insured, correct?
Okay, so should people really pay attention to that? Should they really only
They
get
should.
a
They
HECM?
should. You have proprietary products, which are the company's products, which we do have. Ours is Equity Elite. And then
Yeah.
you have the HECM product, which is the FHA insured product.
Okay.
Differences between the two is you have the HECM is government insured. The proprietary products are investor or lender insured.
Okay. And so a HECM for purchase
Mhm.
means that you can do a reverse mortgage to purchase a primary home.
Correct. It can only be on your primary residence. Any reverse mortgage has to be on your primary residence. It can't be a second home or an investment property. It has to be your primary residence. So if you live in Florida, for instance, you have to and you have a homestead exemption on your home, that's your primary residence. So if you're a snowbird living in New York, but you have that Florida home and you want to do the reverse mortgage on the Florida home, but your primary is New York, can't do that. Not allowed to. But the HECM product, excuse me, Lynn.
Yep, no worries.
The heck of a purchase product, it's just like a regular mortgage when you're using a reverse mortgage to purchase a home, except for the fact that you're coming to the table. Rule of thumb is roughly 50% of the purchase price you're coming to the table with. The reverse mortgage covers the difference. The benefit is you're walking into your new home with no mortgage payment. So let's say you sell your house in New York, let's say for New York, for instance, for $1 million and with no mortgage on it. And you go to Florida, you buy a house for $500,000. Oh, maybe I want to buy that house cash. Well, why should you do that? Use a reverse mortgage to buy the house, purchase the home. 250,000 goes towards the purchase. You come to the table with the other 250. Keep the other 250 you were going to put into the home in your pocket. There's another thing you could do with that 250 from the sale of your home. You could actually establish your own line of credit at the same time as well. So if you have the benefit of having additional proceeds from the sale of your home, instead of taking that money and sticking it in your savings account, earning nothing, or if you don't have any intention of investing it with your CFP, your financial planner, you can bring it to the table and establish your own growing line of credit at the same time you're purchasing the home. So in other words, if you were going to buy the house cash, that 500 grand, and you were only supposed to come to the table with 250, you're still going to come to the table with that 500,000. But instead of having that 500 grand, just not having access to it when you've bought it cash the first time, if you weren't going to use a reverse mortgage, you actually have a $250,000 line of credit that you've established with the money from the sale of your home, growing over time. So in other words, you're giving yourself access to the money you were going to dump into that house anyway.
Yeah, nice.
It's another strategy you can use for the purchase product.
Yeah, very, very interesting.
But the heck of a purchase product is becoming much more popular. We actually have a big initiative in our company right now with this particular product, and I'm a big part of that right now.
Yep. And your company is?
Reverse mortgage funding.
Reverse mortgage funding.
Reverse mortgage funding, absolutely.
Yeah, and I'm going
to corporate office is out of Bloomfield, New Jersey. I work out of my home here in New York.
Nice. So before we go, I'm going to do this in reverse, but I'm going to just do the intro and just say your name.
Sure.
So I have you on recording, and then I'm going to do a formal ending, and then we can wrap things up. Brian and I have another call at 4, and I have to get my workout in because it's what I do.
I hear you.
I heard something the other day in this Facebook group I'm in about, I posted that I didn't feel very motivated to go do a workout. So I was looking for support. It's an over 50 fitness enthusiast Facebook group. And people are like right on it. Like there were so many people just commenting and one guy, just really impacted me. I've been a lifelong athlete and I never really thought about it this way, but he's like, Lynn, get your ass down to your basement. It's not about motivation. It's about discipline. So literally every day when, I think about, okay, number one, it's not that I have to work out. I get to work out. And 2, it's you might not be motivated, but you should always have discipline. So I'm like, you know what? That's my new mantra. You might not always be motivated, but you should always have discipline.
I'm going to take some of that salt and put it in my pocket. Let me tell you.
Yeah. And that has to do with your wealth, your health, your happiness, whatever it is. Everything. It's all about discipline.
It is. It really is.
And we just, our behavior sometimes, that's why at HER Retirement, I'm like, okay, I need to really focus on some behavioral stuff. And that might start with changing people's beliefs, their belief systems. A lot of people are closed-minded. They won't. Reverse mortgage is a perfect example.
People are creatures of habit. I mean, when you think about a reverse mortgage, one challenge that I have with people is getting them to turn their thinking about how a regular mortgage works, making the payment. I have to have the low rate so I can make a small payment. Well, you're not making payments anymore. Does rate have an impact? Yes, it does. But if you have a line of credit and there's no mortgage balance and all you have is your loan, the only thing you're paying interest on is your closing costs. When high rates are not always a bad thing. When that rate goes up, your line of credit, your money's growing at a much higher pace. So you're almost rooting for rates to go up.
Yeah.
So in that scenario.
A quick question, because I'm trying to put this together, but because of inflation, is a reverse mortgage an inflation hedge? Because I know they're saying now's the time to buy a house. we were probably in good shape to buy a house 3 months ago, right?
Mhm.
One, because interest rates are going up, but I've heard that, buying those hard products, buying a house, a car, those are good things to do in a rising interest, in an
Mhm.
inflationary market.
I agree with that, especially with reverse mortgages. Again, the perfect scenario for a reverse mortgage is if you don't have a mortgage at all. And if you're just essentially turning an illiquid asset into a liquid asset. So
Mhm.
we're just allowing you to tap into a percentage of the value of the home based on the age of the youngest of the two married couple or person.
Yep.
Simple as that. And,
Yep.
and that line of credit grows over time and you have access to it for whatever reason. You
Yeah.
could set up an income stream. You could have it as a God forbid fund. In my case, my goal is long-term healthcare,
Right.
which has become a big piece of this business at this point.
So it's just another tool for protecting you against risk. And just
Correct.
like insurance, it's how much risk are you willing to assume? How much are you willing to, quote, invest to protect yourself from those risks?
Correct. Correct. And my explanation to that is, how much is your life really worth?
Mhm.
My response should say that. How much is your life worth? How much is it going to cost you to ensure that you're going to be okay? If we can show that it makes sense, great, then it makes sense. We'll take care of it. If it doesn't make sense, we'll tell you it doesn't make sense. And we'll tell you that you shouldn't do it.
Yeah. It's kind of like I read a statistic and I can't remember the exact numbers, but people spend so much money on car insurance and, other types of insurance, but not so much on life insurance. But the likelihood, there was data showing the likelihood of all these things happening. And, I think like car insurance maybe was like one of the worst. Like you're paying to insure about something not likely to happen.
Yeah,
Anyway,
most likely not going to happen, but
yeah,
you are going to die.
yeah,
Eventually you are going to die, whether it's now or when you're 90, you don't know, but how do you ensure that fact that if something does happen to me, or if I need help between now and the time I do get sick, or if I die, what's left over for my wife or my husband, what's going to give me that peace of mind?
right.
So this is an avenue towards that peace of mind. And again, it should be discussed.
Yeah. Is there any
Education is the key. Education is the
education? Yeah.
most important thing.
My tagline is knowing more is having more. Is there anything that you have that compares, um, I've heard that a HECM reverse mortgage is a really good alternative for long-term care costs.
It is. So
But
long-term care is very expensive. I mean, granted, you have an upfront cost with a reverse mortgage that could be expensive, but in the long run, the growth outweighs all that.
okay. Yeah, I'm
The
just
growth of
wondering
that
if there's
line of credit. I mean, essentially, if you have, let's say, if you had a $1 million home, your closing costs could be upwards of $31,000.
yeah,
But with the 2% premium that you're paying for the upfront MIP. But if that's all you're paying over time, and you can again pay that down to that $50 mark, because again, a reverse mortgage is a 100% guaranteed line of credit unless you pay it off completely. So
yeah,
you could pay down that balance to $50 to maximize your growth, and then you're only paying interest on that 50. So it all depends on if you have the ability to do so. But growing over time, you want to let that money compound and grow and let it sit as long as possible.
yeah. So if I were to take out a reverse mortgage and I have to, and let's say my house was $500,000, how much cash do I have to bring to the table to get a reverse mortgage?
You wouldn't have to bring any cash to come to the table. It comes out of the proceeds of the loan. So whatever you qualify for, closing costs come off the top of
Oh,
whatever you
okay.
qualify for.
So you don't have
Nothing
to
comes
bring
out
any
of your
cash.
pocket physically. Correct.
Nothing comes out of your pocket. It's going to cost you, but it's coming out.
Out of the
Right.
proceeds of the qualifying proceeds of the loan. Correct.
Okay. Okay.
Yeah. So there's no money. So if that's a great question, because that does come up a lot. Oh, I don't have that money to come to the table. Oh, no, Mr. and Mrs. Jones. It doesn't come out of your pocket physically. It comes out of what you qualify for. It comes off the
Okay.
top.
Okay. Good. I'm glad we clarified that.
Mhm.
Okay.
That's a big deal. That's a great thing you brought that up.
Yeah. Well, Luke, thank you so much for talking to me about HECMs and
No, it's
reverse
my pleasure,
mortgages.
Lynn.
Yeah, always great to talk to you. You're doing
Absolutely.
amazing things for people, helping people take their housing wealth and turn it into whatever they need it for. And that's just a great tool for a lot of people. And it's going to help people have a little bit more in retirement and my platform, Her Retirement, is all about helping people know more and have more and uncover some unique strategies that they might not otherwise know about. And as I always say at the end of my podcast, it's all about getting her done. So if you have questions about reverse mortgages, you can reach out to me. I can connect you up with Luke. He's always willing to talk to anyone. You know, he's good Italian guy, always willing to have a good conversation. You got any good lasagna recipes there, Luke?
Oh, geez, don't get me started. I'm on a diet. I'm off I'm off the pasta for a while. My doctor yelled at me,
Yeah.
but it was a real pleasure, Lynn. Thank you for having me. I really appreciate it. And again, with the reverse mortgage guys, just just learn about it. And just have the conversation. It's not for everyone, but the conversation should be had. You should definitely look at it and see if it makes sense for your scenario.
All right. Thanks, Luke.
Thanks,
All
Lynn.
right. So now what I want to do is I want to go back and just do my quick intro and
Yeah.
just introduce you. And so I can have a full, Jake's going to kill me because I'm going to be all over the map. I'm going to say, take the last minute and put it at the beginning. But anyway, all right. So, hey there, everyone. Oh yeah. Hey, Jake. So, hey there, everyone. This is Lynn with Her Retirement. And this week I am talking with Luke Centrone about reverse mortgages. Hello, Luke.
Hello, Lynn. How are you?
Good. And so Luke is with Reverse Mortgage Funding. And can you just give us a quick 5-minute elevator pitch about what you do at Reverse Mortgage Funding and whatever you'd like to add?
No, absolutely. Well, I'm a HECM reverse mortgage specialist. I should actually say I'm a reverse mortgage specialist because of the proprietary product nowadays. I've been with this company now. It's this particular company with the name is 8 years, but the same group of people for the last 13 years. Company is again called Reverse Mortgage Funding out of Bloomfield, New Jersey. I work out of New York, out of my home, like every other loan officer working out of their home. Been doing this now for a really long time. I've been in the industry for 25 years, but in the reverse space for 13. Love what I do. I get to help a lot of people and meet many, many different types of people over different scopes and platforms. I actually got to speak with J. Edgar Hoover's driver at one point. That was an interesting conversation. We had a good time that day. But I was able to do a reverse mortgage for him as well many years ago. But yeah, in the long run, Lynn, I think the company itself, we are a direct lender. We write the checks. We also service our loans, and we take pride in education. Education is first and foremost very important, that we help the client understand how the product works, the mechanics of it, and the long-term ramifications and the impacts of the product. And in the end, if it makes sense, we'll take care of it for them. If it doesn't, we'll simply tell them that it doesn't, and we'll lay it out on the table for them.
Yeah, at Her Retirement, I'm all about, helping women uncover some strategies. And I think that lots of women, single women, suddenly single women, partnered up women, they have housing wealth, but they just aren't aware that they can use that to potentially improve their retirement outcome. And so that's why I was really excited to talk to you about this today, to give these women some insight into a strategy that they might not have heard about, or if they have heard about, they probably have been misled. So
there are a lot of misconceptions, and again, the education piece and the conversation will bring all of that out and help someone understand the entire picture and let them make the decision of whether or not it makes sense.
All right, so let's dig in. All right, and that's where I'm going to end and go to some of this. Yeah, this will be a fun one for Jake to put together. Cool. He'll be like, Mom, why didn't you just do it from the beginning?
I can't wait to see the final product.
Oh my goodness. Yeah.
It's so cool.
I'll send it to you. I'm thinking probably the week after next. That, depends. Jake has a couple that he was actually just texting me. I'm doing a tax one, and he was like, I can't read the transcript. I'm like, what is he talking about? I'm like, oh God. But anyway, well, thank you so much for taking the time.
You're welcome, Lynn.
I know we've talked in the past about doing some kind of marketing agreement. And so, I'm getting everything together where I'm going to do a formal launch. So I
Okay.
would like to have a more in-depth discussion about that with the folks at Reverse Mortgage Funding, or,
Okay.
you know, whoever those people were before that we involved in the conversation.
Yeah, they're know that we're still talking
Okay.
and that it's coming. So, and they're all gung ho, believe me. Our company, just between you and me, our company is throwing a ton of money at financial planning.
Yeah.
Our planner network. It's all about that right now.
Yeah. Yeah. So, what do we need to do to get that kind of going and formalized? And
Do you remember do you still have the old contract that they sent you?
I probably do. I can look it up by your name.
Take a look at that. And just
Yeah,
reply to that email, that original email, and just simply say, Luke, I'd like to get all this started again. How do we do that? And I'm going to forward that on to my people.
Okay.
Say, Lynn would like to get this started again. How do we go about doing it? I'm going to put that in their ballpark and see what they say.
Okay.
So that's entirely up to them. They got to drive all that.
Yeah.
Legal and all that
sounds
stuff.
good. Well, yeah, and I'm sure you'll, you know, in Brian's case, you know, he just wants to refer business over. So that's just kind of the extra stuff, you know. But in my case, it's just a different, you know, financial model. So I just I'm doing something with a company called Trust and Will, because so many people don't have up-to-date trusts and wills. And it's an online service that offers it pretty significant less money than if you were to do a traditional trust and will with like a local estate planning attorney. And they did a great job on a couple of people that we referred over. So I'm like, okay, we'll test it out, make sure it's good, you know, before I put them in my network. But they're definitely going to be a part of the network.
Okay,
now, so.
that sounds cool.
Okay,
Sounds real nice.
Yeah,
Lynn, thank you so much, dear. I appreciate it. But I'm going to call you later. I want to talk to you about something else
sounds good.
on this.
Sounds good.
All right. I'll see you later.
Okay. Yeah. Bye.
All right, bye.